Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. You work hard to accumulate your assets, so you better work just as hard to protect them. The good news is that there's lots of ways for prudent investors to do exactly that. We'll talk about asset protection today and the new Corporate Transparency Act, and we've got two awesome guests on the Real Estate Guys radio program. The Real Estate Guys are throwing a party, and you're invited. Join us at the New Orleans Investment Conference, November 20th to 23rd. Now in its 50th year, it's the nation's longest-running investment conference and features some of the biggest names in economics and investing, including James Grant, George Gammon, Danielle DiMartino Booth, Rick Rule, Lynn Alden, and Doug Casey. Plus, I'll be speaking in multiple sessions, attending lots of others. And the Real Estate Guys are hosting our annual invitation-only party one of the evenings for our friends and listeners, including some VIPs for you to mingle with. So make plans today to join the Real Estate Guys at the 50th Annual New Orleans Investment Conference. With all that's going on in the world, no serious investor can afford to miss it. Send an email to neworleans@realestateguysradio.com and we'll get you all the details. And I'll see you there. Welcome to the Real Estate Guys radio show. I'm your host, Robert Helms. If you're like me, you like collecting real estate. Love to have more and more properties in my portfolio that provide cash flow, tax benefits, and eventually maybe some appreciation. And when you start out, your main focus is just finding great markets, great teams, and great properties. But once you build up some assets, you start to think about what it takes to legally protect those assets. Let's face it, we live in a litigious world, and if a tenant or a neighbor or a predator wants to come after you, there's a good chance they can sue you. In fact, in America, you can virtually sue anyone at any time for any reason, and sadly, many people do. But the great news is that with a little study and a little bit of work, you can create an ironclad asset protection strategy that isn't that hard to maintain, but should things not go your way, could save you a fortune. Now, years ago when I started buying real estate, few people did this. Bigger deals were done in general partnerships, sometimes limited partnerships, but most folks bought their investment property in their own name. Over the years, however, we've learned that it makes better sense to be more careful and strategic about it. Robert Kiyosaki says you should own nothing and control everything. And it doesn't mean you actually don't have any assets. What he means is that you appear poor on paper, and you can do that with proper legal entity structure. It may not be the fun part of investing in real estate, but should anything go wrong, you'll be glad you did it. But you can't really try this at home. In order to be legally protected, you're going to have to solicit the help of an attorney. And I would recommend a real estate attorney. The good news is we've got two of them on the show today. For more than 2 decades, Garrett Sutton has helped us out when it comes to understanding legal strategies and, in fact, creating many of the entities we've used. And his son, Ted, is also now a practicing attorney. He'll be making his Real Estate Guys debut on today's show. And my favorite thing about the Suttons is they don't try to scare you or encourage you to overspend. They take a practical, pragmatic approach to protecting those assets that you've worked so hard to obtain. When we come back, Rich Dad advisor and best-selling author Garrett Sutton and his attorney son, Ted Sutton, on the Real Estate Guys radio program.
Hi, guys. My name is George Gammon from the Rebel Capitalist Show, and you are listening to the Real Estate Guys, my favorite podcast when it comes to macroeconomics and real estate investing.
Welcome back to the Real Estate Guys radio program. Now in our 28th year of broadcast, we're talking about the important parts of protecting what it is that you earn. When we're new as real estate investors, we're just trying to acquire a lot of stuff, cash flow and property and assets, and we have to think about how we're going to protect ourselves. And to help us do that, let's introduce you to a couple of guys who know that business very well. It's the Suttons, Garrett and Ted Sutton. Hey, guys.
Hey, Robert. Thanks for having us.
Garrett, we go way, way back. And Ted, we actually go way, way back, too. I think the first investor summit that you were on was a long time ago. But Garrett, you have been a guy that's helped folks protect their assets forever. And it's not sexy and it's not exciting, but it's so important.
Well, you want to protect your assets because if you lose them, your spouse gets angry. So, we really want to take care of things right at the start. When you buy that first rental property, you need to think about an LLC. The longer you wait, the more you are personally exposed to a claim. So just do it now. And, Robert, I've traveled with you. Your seminars at sea are terrific. Ted, I think, has been on, 2 or 3 of them?
Yeah, I've been on 2 of them.
And, we just have a great time with the group that you put together. And, it's just been great talking to your listeners about asset protection all these years.
Well, I sure appreciate that you guys make it pretty simple. There's a lot of attorneys that, they know what they're doing, but they want to justify their big hourly rate and all that. And you guys kind of take the opposite approach, which is to make it simple, make it understandable, not something that takes forever to do, but it is a process. And so just the very act of saying, rather than own in my own name and therefore incur all the potential liability associated with that, if I just had that ounce of prevention, I form an entity. Not daunting. You guys make it super easy. But at the same time, you need to follow what you've taught us, Garrett, which is the corporate formalities. When it is the entity that owns the property, it's not you.
Correct. There are these ongoing requirements that you have to follow in order to stay protected. Too many people will set up the LLC and think they're done. They don't transfer title into the name of the LLC. They don't pay the annual fees. They don't set up a separate bank account. These are all problems that can arise later and have someone pierce the corporate veil, go through the entity, and reach your personal assets. And we're going to talk about a new requirement that we have, the Corporate Transparency Act. One more requirement that you have to follow in order to stay current and protected.
A few weeks ago, we were in an event together, and Ted, I got to see you take the stage for the first time, and you talked about this very thing, the Corporate Transparency Act. We're going to get to that because it is non-negotiable. If you're going to have a new entity and even an existing entity, we'll talk about how that affects you. And then the guys put together a great report, so you don't have to remember everything you hear if you're on the treadmill or driving. But this is super important stuff. If we start with the premise that I'm going to have that ounce of prevention. If nothing ever goes wrong, well, it costs me a little bit of time and a little bit of money, but I know I'm protected. But if you wait until something bad happens, then it's too late.
That's right. Talk about your seatbelt analogy.
Yeah. So, one analogy I like to use is like you put on a seatbelt before you get in the car and, you drive it. If you put on the seatbelt beforehand and you get into a car wreck, you're good to go. But if you put it on afterwards, the damage is already done and you're injured. So, a lot of this is an ounce of prevention when it comes to properly setting up your LLC. It does cost money, but in the long run, it'll protect you better just because we'll draft all the paperwork. We'll draft the operating agreement. We get the EIN number that you can use to set up a separate bank account. And on top of that, we're going to help you perform these Corporate Transparency Act filings. And failure to file means you're subject to very steep penalties. And they include $10,000 in fines or 2 years in prison. So, if you have to pay a few $100 to save yourself $10,000, I think we all know which alternative we want to use there. So, yeah, it definitely is an ounce of prevention to prevent you from any more significant loss in the future.
And I'd like to mention one thing, Robert, and that is, these LLCs are another form of insurance. We always want you to have insurance on your rental properties. That's the first line of defense. And these LLCs are the second line of defense. And so when you're paying money for an LLC, just look at it as another insurance policy. Because that's what it's providing, insurance that you won't be held personally responsible for the claim of a tenant.
And that's a great mindset about it. And we wouldn't think of owning a tenant-occupied property without insurance. And let's face it, insurance has gotten more expensive, so you do have to navigate all of that. But I think that also gets to the point where if something isn't covered by insurance, then this protective layer of the LLC can really be of benefit. But I want to make sure folks understand that the LLC is separate from you. It's not you. And so you do have to follow these formalities, meaning you're going to sign in the proper signature block in the proper way, because very often if you don't stick to the formalities, they aren't difficult, you just have to be disciplined, then that's when you get opened up to this piercing of the corporate veil, which basically disregards all the work that you did to protect yourself.
Well, and I wrote a whole book on it, Veil Not Fail. I mean, it's so important that you follow these formalities. And like you say, Robert, they're easy to follow. But if you don't follow them, the consequences are pretty dramatic. In piercing the veil cases, 50% of all cases succeed in piercing the veil and getting at the individual's personal assets. That's a testament to how many people aren't following the formalities. So that's one of our jobs here at Corporate Direct, is to make sure that you stay current, that you follow the formalities, and you'll be protected in the event, God forbid, you get sued.
Yeah, it's not set it and forget it. Most of the work you'll do up front, and they'll work with you guys to figure out, what jurisdiction and what do we need and how do we make sure we've got all the paperwork done and the I's dotted and the T's crossed. But then you do have to make sure that you're doing your part of the work. And again, not difficult. Lots of real estate investors have gone through this over the years. But let's talk about this. LLCs are generally state-level vehicles. So let's say I live in a state and I buy a property in another state. How do I decide what's the best jurisdiction for you guys to form the LLC in?
We like to form the LLC in the state where the property is located. You buy a property in Utah. We have a Utah LLC. You're doing business in the state of Utah. And then we have that Utah LLC owned by a parent, Wyoming LLC. Wyoming offers excellent asset protection in the case of the outside attack, when you get sued over a car wreck. It has nothing to do with the Utah real estate. They'd like to get at the Utah real estate, but they have to fight through Wyoming. And Wyoming has very strong charging order asset protection laws. So that's how we like to set things up.
So if I have several properties in several different states, you might set up an LLC in each of those states that holds title to the property. But those LLCs would in turn be owned by my Wyoming company.
That's correct. So, the Wyoming LLC comes in handy because not all states have the charging order protection. So, in the example that Dad used, if you set up an LLC in the state of Utah, the state of Utah doesn't offer charging order protection for LLCs. So if you had that Utah LLC and you, Robert Helms, owned it individually, if you got into a car wreck, it'd be much easier for that car wreck victim to reach inside the Utah LLC and get the equity from your rental property. But if you have a Wyoming LLC on top that you own, so you own the Wyoming LLC instead of owning the Utah LLC. So with the Wyoming LLC in place, it sort of acts like a blockade, where if you get in that car wreck and they want to collect your assets, you lose in court, they would have to get a charging order on your Wyoming LLC. And in that case, it's much more difficult for them to reach after the assets in the LLC and the assets in the LLC beneath the Wyoming, like the Utah. So it just provides people peace of mind in the event they're sued personally, and it makes it much more difficult for a later creditor to reach after your personal assets, which is what we want to have happen.
And just to mention insurance again, I always recommend that people have that umbrella policy of insurance for home and auto. $1 million of extra coverage is only $400 a year. The attorneys know how to get at the insurance money. If you get in that car wreck, they'll get at the insurance money, and they tend to leave you alone on the Wyoming LLCs because it's a big waste of time for them. They're going to be sitting around waiting on a charging order. And so we like to have a combination of insurance and LLCs to best protect you.
Well, and the very talk of the charging order indicates that these laws are different in different states. And I know there are a few states where you have that solid protection. But let's talk about what the charging order is, because this is fascinating. If you mentioned the outside attack. So if I own a property, if something happens on the property, my tenant slips and falls, or there's some sort of, issue there, that's not what I'm protecting in the LLC, because they're probably going to be able to get to the property. What I'm trying to protect is the other things that I do that cause potential liability in my life, and making sure that that's kind of sequestered away. And this charging order does really provide a disincentive for anyone to try to get at that.
That's correct. The charging order is a lien on distributions. So under California law, under Utah law, they can go in and force a sale of the asset. But by having California and Utah LLCs owned by Wyoming, the exclusive remedy in Wyoming is called the charging order. And this means that the car wreck victim is entitled to receive what is distributed out of the Wyoming LLC. There may be no distribution. So they're sitting around waiting. And it's just, attorneys are on a contingency fee. If they have to mess with a charging order, they're going, my time is better spent going to the next case that has insurance monies. And so we just want to put up as many real or perceived roadblocks as we can. And the Wyoming LLC with the charging order protection is a real roadblock.
Now, you mentioned the cost, and the cost does vary from state to state because there are different filing fees and the like. So my recommendation would be to reach out to you guys and get a quote, right? You're really transparent about what those costs are. But let's talk about what, the cost you have up front and then ongoing costs to maintain an entity like an LLC.
Yeah, so when it comes to ongoing compliance, the first thing is the registered agent fee. So when you set up an LLC, like if you set up the Wyoming LLC to act as your holding company, you pay a one-time filing fee of $100 a year. In every subsequent year, you have to make sure that you're renewing the LLC to make sure it's in good standing with the Secretary of State. So you have to pay an annual filing fee there.
Of $62. It's not expensive.
Yeah. And then on top of that, there's an annual registered agent fee. And the registered agent address, you must list it on the Secretary of State's website. And the registered agent there serves a really good purpose because they're there to accept any government mail on your behalf. So in the event that there's a lawsuit filed against your LLC, they're the ones who accept service of process and turn around and notify you immediately. So you have an annual filing fee with the state as well as an annual registered agent fee that you need to use to make sure your LLC is in good standing.
And then at the start, you're asking the fees at $795. And then that includes the registered agent fee of $125. And it also includes our Corporate Transparency Act filing fee of $250. So that's rolled into the $795. You get the first year registered agent fee free. We're going to do the filing for the Corporate Transparency Act for you. So that's all rolled into that one fee. And then in the second year, you don't have to pay the formation fee. You just pay $62 to the state of Wyoming and the $125 registered agent fee.
And these are fairly nominal fees, but at the same time, this is what gives you that protection. So let's talk about the Corporate Transparency Act. This has just come about. I think we first talked about it on the show in November, and then there was some news about it in terms of it being deemed unconstitutional and all that. But let's just start at the act, what it requires people to do, and maybe even the thinking behind it.
Yeah, so the Corporate Transparency Act, it's a new federal disclosure law. It was passed into law on January 1st, 2021, so right at the end of Trump's term, and it took effect on January 1st, 2024. And the reason why Congress passed it was to target certain criminal activities like money laundering and terrorist financing. So, I understand why they passed it, but because it's been passed, there are some things that it requires. And the CTA, Corporate Transparency Act for short, it requires people to report information about their business to FinCEN, which stands for the Financial Crimes Enforcement Network, and it's a branch of the U.S. Department of Treasury. And there's 3 pieces of information that you need to report. They're all going to be in the report. They're the reporting company information, so information about the company. I also talk about exemptions in the report. So this is LLCs, corporations, limited partnerships. So for any real estate investor or business owner out there who uses these entities, most likely you're going to have to report information. And on top of that, you need to report beneficial ownership information. And this is anyone who either owns 25% or more of a company, or they exercise substantial control over it, meaning that they have management authority. And if you count as a beneficial owner, then you're going to need to report personal information about yourself to FinCEN. The third piece of information is company applicant information. And this is for people who set up the companies. In that case, you need to also report your personal information to FinCEN. And, it's interesting how you mentioned how the Corporate Transparency Act is unconstitutional. I talk about that in the report. So make sure that you guys download the report to read about that, because you guys are going to need to know whether or not it's unconstitutional.
The case came out and it only applied to the plaintiffs in the case. So it doesn't apply to the rest of us. You still have to file this. And I'd like to mention one little wrinkle, Robert, and that is when you file this report, you're good. You file the information. But if there's a change in your corporation, someone comes in and they're a 25% or greater shareholder, you've got to file an amendment. They also, at the very start, want a copy of your driver's license or passport. Now, when your driver's license renews, you've got to update the report and send them a new copy of your driver's license. So there's an ongoing requirement to file here. And that's why we're keeping track of our clients' dates in our database so that we can let them know, hey, you need a new driver's license. You've got to amend your CTA filing now, because the penalties, as Ted mentioned, are really significant.
Now, this applies to anybody who starts an entity today. This would be part of the process. But what if I started my entity a year ago or 5 years ago or 10 years ago?
Yeah, so the timing to submit your reports depends upon when the entity was formed. For any entities created before January 1st, 2024, so this is 2023 and earlier. So most entities out there fall into this reporting period. If it's 2023 or earlier, you have an entire year to get this information to FinCEN. So until December 31st, 2024.
8 months left.
Yep. So, and we all know how fast time goes. So, my recommendation is just submit it as early as possible. And then for entities formed in 2024, you have 90 days to get the information to FinCEN. So, there's still a little bit of time, but it's much shorter. And then for entities that are created in 2025 and beyond, you only have 30 days to submit your information to FinCEN. So, the time really starts to get short, clock starts to tick, and, you're going to need to get in that information as soon as possible.
So, Robert, here's another thing, a little wrinkle for syndicators, right? You're going to syndicate a project and, you start out with the general partners or whatever. You file the report, but if you bring more people in that have 25% ownership or more, you're going to have to file an amendment after the 30 days are up. So just know that if you're going to be doing syndications, there's this ongoing reporting requirement that you're going to have to follow.
So basically, it is a one-time report, but anytime the information changes, including your personal identification, you're going to upload that. If I use my passport, then at least every 10 years I need to update that. My driver's license might be every 4 years. What if I get an extension on my driver's license?
Good question. I don't know.
I don't know either.
I knew you'd ask a question that would stump us.
Well, I guess it wouldn't hurt to upload that. So I think, when this first came out, a lot of folks who are real estate investors and have entities, and a lot of your clients are like, oh, this is awful, and it's one more thing I have to do, and all of that. But it's not terribly onerous once you do it. We can all grumble about it. I don't think any of us are happy about it. But I do know that making it simple like you guys had, so it's just part of the process, gets it over and done with, and you know you've got it filed. And it's not like some of this information isn't publicly available anyway. So rather than choose to fight it, even though this big plaintiffs group did, probably best just to comply.
Yep. I agree. It is something that has a lot of people are upset about it. They think it's government overreach. You're creating a database that has all sorts of sensitive information in it. And, the penalty for hacking the database is 5 years in prison. But whoever catches a hacker,
Right.
this information may get out there. It's sensitive information. But at the same time, like you say, Robert, just do it. Just get the information in and be done with it. Because if you wait until December, if you say, oh, this is unconstitutional or whatever, there's a lot of misinformation out there about this. But if you wait till December, that is not a good time to file it, because there's going to be this rush at the end and you may not get it through until 2025. You're better off doing it now.
Ted's put together a report that'll help you digest all this stuff. If you want a copy of that, we'll tell you how to get that when we come back. Also, we're going to play real estate trivia next and give away one of Garrett's books. We're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects totaling more than $1 billion. Don't wait for someone to give you a raise or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
Having trouble finding deals where the numbers make sense? Invest in an asset class that delivers cash flow to you in good times and bad, and where most of that cash flow is tax-free. I'm Dave Zook. Many of you have heard me speak at Real Estate Guys events or heard me on their podcast. My team is a top 5 ATM operator in the country, and right now accredited investors can make cash flow returns well into the double digits and get huge tax deductions. For your free report on this lucrative asset class, email atm@realestateguysradio.com.
Hi, this is Kevin Harrington, an original shark from the hit TV show Shark Tank, and you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. In a little over a month, you can join us at the 22nd Annual Investor Summit at Sea. We've got a few cabins left for this extraordinary trip. A couple of days at a hotel in beautiful Fort Lauderdale, followed by 8 days on a luxury cruise ship with an amazing all-star faculty, including Tom Wheelwright, certified public accountant, sales legend Tommy Hopkins, the rebel capitalist George Gammon, editor of the Gold newsletter Brian London, real estate rock star Kenny McElroy, and Peter Schiff, plus lots more. You're going to have to move quickly, so to get the details, just send an email to summit@realestateguysradio.com, summit@realestateguysradio.com. Come with us to visit Aruba, Curacao, and Bonaire. And we just confirmed a brand new faculty member. That'll be a surprise when you get there. Just send an email to summit@realestateguysradio.com or go to investorssummitatsea.com. We're talking today about an ounce of prevention, how you can legally protect yourself and your assets. And we've got attorneys Garrett and Ted Sutton with us. Before we get back to that interview, it's time to play Real Estate Trivia, your chance to win a prize by knowing today's real estate trivia question. As soon as you hear the question and think you might know the answer, Send your best guess to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. Give us your name, the answer to the question, and your physical mailing address. The first person that gets it right gets a signed copy of one of Garrett Sutton's awesome books called Loopholes of Real Estate. That can be yours if you know today's real estate trivia question. Last week on the show, we had Rich Dad advisor Tom Wheelwright. Just a coincidence. And we asked this: which U.S. state collected the most tax revenue in 2022? Well, the winner, by a lot, the state of California. In the fiscal year of 2022, California collected a total of $280.83 billion U.S. dollars in tax revenue, the highest of any state. New York collected the second highest amount of taxes in that year, coming in at $117.98 billion U.S. dollars. Ouch. Here's our real estate trivia question for this week. From a cost standpoint, the United States is the most litigious society in the world. We spend about 2.2% of our gross domestic product, roughly $310 billion a year, on tort litigation, much higher than any other country. But the U.S. only ranks fifth when it comes to lawsuits per capita. Which country ranks first? Yeah, it's not the U.S., but which country has the most lawsuits per capita? If you think you know, or just want to guess, send your best answer to trivia@realestateguysradio.com. Give us your name, your guess, and your physical mailing address. The first person that gets it right gets an autographed copy of Loopholes of Real Estate by Garrett Sutton. That's today's real estate trivia question. We're with the author of that awesome book, Garrett Sutton. Garrett, there are loopholes for real estate investors. People think about loopholes and they think they're doing something they're not supposed to, but it really is all above the board, all just great opportunities for real estate investors to positively exploit their real estate investing. Tell us about that book. It's a great book.
Well, Loopholes of Real Estate, it's been out for a number of years. I've updated it probably 4 or 5 times because the laws change. But, when you think of loopholes, you're right. It has this negative connotation, but we have loopholes that are part of the tax code. They're there for everyone. And so the book talks about how we open the loopholes for tax considerations. Then there are loopholes that allow us for legal purposes to close and limit our liability. So we talk about opening loopholes for tax, closing loopholes for legal purposes. And so that's what the book is about.
Love that. And, I think that as folks acquire more and more assets in real estate, when you start off, you're not that worried about protecting your assets because you don't have too many. But once you do, it just becomes more and more of your regular practice and discipline. And having gone through the process with you guys, you make it super simple. You got a great team. And you can you guys actually form LLCs in all 50 states.
That's correct. We provide the registered agent service in all 50 states. And so, wherever you're investing, we're here to be able to help you.
Now, I have to ask, Garrett, because we've been friends a long, long time. You've been at our events and so forth. And I think the first time, Ted, you were on the summit, you came up with one of the ideas that we still use today. I remember you came up and said, Mr. Robert, what if we got all the kids and we all sat at one table? And so now when people come on the Investor Summit, we put all the kids at a couple of tables, which is kind of cool. But your son has followed in your footsteps. Talk about that.
Well, it's great, Robert. I mean, it's great having him here in the office, and he's learning the law and really getting up to date on it all just very quickly. So it's really, every dad's dream that, the son will come into the business. As well, the staff loves it. I'm not selling the business. We're going to keep it going into the second generation. And that provides a level of comfort and security for our staff as well. So it's all good.
And, another thing is that we do have a really good working relationship. I mean, there is a stigma out there about people working with their parents, but overall, we do have a really good relationship. And, for the most part, he's a pretty chill boss, which is really cool. Yeah, no, he has been a really good mentor, and I have learned a lot of good things from him. And, everyone here at the office works well together. So it's definitely a good opportunity, and it's a good situation to be in for sure.
Well, we love to see when folks get started early. My 18-year-old son bought his first house the day before he turned 19, and you guys have done the entity for him, and just helping them understand that is a big part. And I think that when we look around and see what's happened to young people that have mentors, it's extraordinary where their life can go. And the other side of that is when they don't have teachers and mentors. And Ted, you've written an ebook about this that I want you to tell the listeners about. This is a pretty cool ebook.
Yeah, I sure did. So this ebook's titled The 5 Tricks to Teach Your Kids About Money. Now, I mean, as we all know, financial education isn't taught in schools, but particularly it's not taught for kids. And so, a question that I kept getting was, how do we teach kids about money? And so I came up with 5 tricks, or, not tricks like you're pranking little kids, because that would be really mean. But these are just 5 methods that you can use to boost your kids' financial IQ. And, one example is setting up a lemonade stand for your kids, learning how to make lemonade, how to market the lemonade, how to run a business with it. So that's one of the tricks that's in the book. For the other 4 tricks, you can head on over to that email link and download the ebook for free. It's at no cost. It's 20 pages, and there's a lot of good information in there for you.
All right. The ebook's called 5 Tricks to Teach Your Kids About Money. If you'd like a free copy of that, all you have to do is send an email to tricks@realestateguysradio.com. tricks@realestateguysradio.com. So you followed in your dad's footsteps in terms of the law. Now the next thing will be best-selling author.
That's the hope. I think I've already sold 200 copies. He's sold 1 million.
Wait, you didn't sell them. They're free.
Technicality.
Okay, people purchase, right? People have, downloaded it. So it's got to count for something, right? I mean,
an excellent start, I would say. Well, one of the things about the legal side, when we read a contract, when we're signing, a document, I mean, people get nervous about all that stuff. But I think the reality is we need to understand everything we sign. And today we have folks that, they list their house and they have the standard form, and they buy a house and they have the standard form. When we do development and acquisition and business mergers and all that, it's all custom stuff. Take people through what they really should be doing when they're, say, in their first purchase contract for a bit of real estate.
Well, I think that they should certainly talk to an attorney. In some cases, the real estate broker knows enough. If you trust your broker and they are looking at these contracts day in and day out, maybe they're a resource for you. I know plenty of clients that will have an attorney review it. Many of these forms are standard forms. In a lot of cases, there are no surprises in them. And your broker would or should point out anything that's what we call a howler, or something that is not appropriate. But I think actually looking at those forms, if you can get a copy, is certainly the cure for insomnia. But it's also, if you're going to be buying a lot of properties, it makes sense to actually read it yourself. So you can go to an attorney, you can go to a broker, but you should read that contract yourself and understand the terms of it. And if something isn't clear, don't be afraid to ask a question of the broker or your attorney to explain whatever isn't clear.
Absolutely. I've always made it a practice to read contracts with a highlighter, and I just highlight things I'm not 100% sure of. And a 15-minute phone call to your attorney can usually quell any doubts that you have, and it's back to that ounce of prevention. It might cost you a little bit of time and money, but it's going to protect you in the long run and make sure that you understand what you're getting into. I want to talk about one more thing with you guys, and that is you mentioned, especially when it comes to the loopholes, that there are tax loopholes. There's a big distinction between your legal team and your tax team. Your attorney isn't going to practice tax, if you will, and same thing, your CPA isn't a lawyer. But I think you guys have a really good mindset about how you work together with those professionals. Can you share that?
Yeah, I like the team approach. You're going to have a CPA that's going to help you with the tax side, an attorney that's going to help you with the asset protection side. Tom Wheelwright hates it when I say this, but CPA stands for cannot protect assets. And so, but you want to develop that team. And you want to get away from this idea that, okay, the attorney says, talk to the CPA. The CPA says, oh no, talk to the attorney. You get on a call or you get in a room together and you'd solve everything in 20 minutes instead of playing ping pong back and forth with the professionals. I think it's best to just get everybody together and discuss everything all at once.
That is a golden nugget right there. Seems expensive to have both your accountant and your attorney on the phone, but what's expensive is going back and forth and back and forth. And the attorney says, well, you should do it this way. And the accountant says, well, wait a minute, for tax purposes, you should do it that way. And it's such good advice. Just get everyone on the phone, a 20-minute Zoom call, get it worked out. And the other thing that does is it helps your team members kind of get a feel for the other members on the team.
Exactly right. And a lot of times on the tax stuff, I defer to the CPA. I mean, they've been, hopefully they've been doing this person's taxes for a long time, and they know intimately the tax situation of my client. And my job is to protect the assets. And if the CPA has a recommendation, an LP versus an LLC for tax reasons, I'm completely open to that. So I enjoy working with knowledgeable CPAs, and I look forward to having team members that are willing to share and come up with the best solution for the client.
The team approach is always the best approach. And here we are with Team Sutton. So great stuff, guys. Listen, if you're interested in finding out more about the Corporate Transparency Act, if you already have an entity, you're going to need to comply. If you form a new entity, then you definitely need to comply. Ted's put together a great report. All you have to do is send an email to ACT, Corporate Transparency Act, at realestateguysradio.com, and we'll get you out that report. If you're interested in Ted's book about those tricks that you can teach young people about money, then just send an email to tricks@realestateguysradio.com. Well, gentlemen, we sure appreciate your time and talent today. It's been great catching up with you.
Good seeing you, Robert.
Yeah,
thanks for having us.
There's Garrett and Ted Sutton. For more information about the Suttons and what they do, you can find them at corporatedirect.com.
Well, we really like working with the real estate guys. And if your listeners are interested, if they mention the real estate guys, we'll give them $100 off that $7.95 formation fee. So be sure and mention the real estate guys to receive $100 off the entity that you form with Corporate Direct.
That is awesome. We appreciate that. So just go to corporatedirect.com, and when you sign up, and they'll couch you through where to have it, what you need to know if you have more than one member. Easy stuff. You guys have a lot of that automated. It's having gone through the process recently again. You sure make it easy. So just reach out and tell them the real estate guys sent you. You'll save $100. Well, guys, it's been awesome having you on the show. Ted, your first appearance on the show, but certainly not our last.
That's the plan.
Thanks, Robert.
You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
All aboard. It's last call for the Real Estate Guys 22nd Annual Investor Summit at Sea. This one-of-a-kind event is nearly sold out, so grab your spot now. Joining us this year is the rebel capitalist George Gammon, sales legend and best-selling author Tom Hopkins, CPA Tom Wheelwright, and Ken and Daniil McElroy. Plus, Anton Matley, Mauricio Raoul, Beth Clifford, Brad Sumrock, and joining us for his 11th Investor Summit, Peter Schiff. It all begins June 13th in Fort Lauderdale, Florida. Visit investorsummitatSea.com to get all the details and reserve your spot now. And we still have room for a few young adults, ages 18 to 25 at a very special rate. Go to investorsummitatSea.com and make plans to spend time with the real estate guys, Ken McElroy, Peter Schiff, and an all-star faculty on the 22nd Annual Investors Summit at Sea. As I speak, inflation is robbing you at a rate north of 10%. Last year, the number one zip code that Mid-South homebuyers offered income property to Real Estate Guys listeners in appreciated by 21%. To harness that spread and protect and grow your wealth in the current economic storm, You need the 2 decades of experience in renovation and management that Mid-South Homebuyers brings to their investors. Every home Mid-South offers you will have brand new components, a new 30-year roof, and a high-quality renter, all in a price range under $150,000. Their empathetic property managers will use your ROI as their North Star, while the lack of repairs on their totally renovated properties contributes to their almost 4-year average renter stay and 99% occupancy rate. Learn about their lifetime occupancy guarantee and total 1-year maintenance guarantee by emailing midsouth@realestateguysradio.com. That's midsouth@realestateguysradio.com. You'll be glad you did.
Hi, this is Lawrence Yun, Chief Economist with National Association of Realtors, and you are listening to The Real Estate Guys.
And welcome back to the Real Estate Guys radio program. We're so glad you're here. I'll be super glad when you join me in beautiful Belize for our Belize Discovery trip. It's a chance to see an incredible real estate market that also provides some diversification internationally and happens to be beautiful. It takes place July 19th to 22nd in Ambergris Caye, Belize. Get the details on the website at realestateguysradio.com under events, where you'll find the Belize Discovery trip. Well, awesome to hear from Garrett and Ted Sutton. Hopefully they didn't scare you away. That's never their intention. It's really easy to take a few prudent steps and protect yourself, and yet it's astounding how many people don't do it. People continue to put real estate in their own name. It's up to you at the end of the day, but if it's in your personal name, it's easier to find and it's easier to go after. Now, there's more to learn than what we could cover in just an hour radio show, but Garrett's written a whole bunch of awesome books that can help you down this path, like Start Your Own Corporation, Limited Liability Companies and Limited Partnerships, Finance Your Own Business, and of course, Loopholes of Real Estate. They've also got a lot of great resources on their website at corporatedirect.com. And as I mentioned during the interview, Corporate Direct has recently helped me personally with some new entities. And my son, who's just purchased his first house, also used them to set up his entity structure. Now, he just turned 19, but he's thinking ahead. And that's really the point of this week and last week's show. Last week, we talked about tax. With a little planning and a little understanding and a little education, you can spend less on tax. Tom Wheelwright teaches us if you want to change your tax, change your facts. Ted Sutton teaches us that if you put the seatbelt on after the crash, that's a little too late. So take care of that up front. And then, as ugly as it is to talk about, the Corporate Transparency Act is a thing, and you best comply. Ted's put together a great report on that. Just send an email to act@realestateguysradio.com for your copy. That's act@realestateguysradio.com. And if you're ready to form an entity, reach out to the fine folks at corporatedirect.com. If you mention the Real Estate Guys, they'll take $100 off your bill. Hey, before we get out of here, it's time for this week's Market Spotlight. Thrilled to be bringing you the latest on another real estate market with this week's Market Spotlight. And to clue us in, let's welcome our good friend Faris Musa with Disrupt Equity. Hey, Faris.
Hey, Robert. How's it going? Thanks for having me.
Absolutely. You guys are very active in several markets, but the market we want to talk about today is a big one of the top 10 markets, and that's Houston, Texas. In just a few minutes, what are you guys excited about Houston?
You know, we love Houston, right? I think one of the things that everybody kind of looks at is Texas as a whole, right? Texas had a ton of interest in it, and it usually gets the attraction to Dallas and Austin. So you have a lot of kind of hyperactivity in those markets, and they're both great markets. We're in those markets too. But what we like about Houston, it's in our backyard, but more importantly, you have a lot less people looking at it from an institutional perspective, right? And so you're starting to see this momentum build over the past 6 to 12 months of institution looking at some of these deals, right? But ultimately, there's just a lot of money that's been on the sidelines, and now people are starting to recognize Houston as, hey, it is the second largest population growth city in the country. So we talk about 50,000 units coming online in Austin, and that's just a normal year in Houston. And so ultimately, we're really excited. We think there's a lot of pent-up potential, and you have the population growth and job growth that's going to help accelerate all that.
Now, you guys are in multifamily, and you syndicate some big deals, and that we're looking, of course, at what apartment renters need, and it's a very diverse economy. You know, there's so many different industries. There's medical and colleges and the port and all kinds of those things. What are you seeing from the demand side when it comes to apartments?
Yeah, good question. So from the demand side, honestly, out of all the markets we're in, we're seeing the best rent growth and trade outs right now at this, let's just say the past quarter in Houston. And usually Dallas is the one that wins it. Austin, we all know, has gone backwards, but Houston actually has that. And, a lot of people think of Houston as oil and gas, and I think that's a fallacy. It was that in the late 80s, and, the city has learned to diversify away from that. And so we have a very healthy, health sector, no pun intended. We do have oil and gas as a big part of it, but there's a tremendous amount of other industries happening. And the thing that people forget is Houston is one of the only ports in the country that you can basically ship something to and be able to access something like 30% of the population within a 4-hour drive of the country, right? And so there's been huge investments in the port, and that's, it's one of the only cities where basically a tanker can come full with product and also leave full with product back to China because they're loading up all the resin, all the plastics that go back. And so, all of that has really just stimulated the economy, and we're seeing that. And I've grown up in Houston all my life, and it's been interesting to see day to day, especially once you're starting to get this kind of hipster scene that's starting to show up in Houston that never really existed before.
Well, we talk about Houston, it's a huge MSA, so all of the cities that surround Houston proper, and there's lots of different variety there. You have multi-million-dollar homes, and then you have, studio apartments. So you've got kind of everything for everybody. What are you seeing in terms of new supply, especially in multifamily? A lot of talk of new apartment supply coming on in the next year and a half. What does that look like in Houston?
Yeah, so Houston has a lot of supply coming online, right? You're still in that, 50,000 units, and it's not the highest amount of supply that's ever come online this year, but it's pretty close. But the thing is, Houston tends to be able to absorb it. Right. And so you have, 50,000 units coming online in Houston, but we also have 75, 100,000 people moving to Houston. And so you're able to kind of offset it. It is on the high side. And typically we're targeting that B class asset. So we're not as impacted by that kind of A class product. But the flip side of that argument, too, is you have almost no supply that's being approved right now. So in the next 3 years, there's very little inventory that's going to show up. And so we're really focused on, hey, which deal can we get going and go through the hard kind of situation that's in now in terms of getting the equity, getting the financing, get it going. So that way we're one of the few products getting delivered in 2-3 years.
Now, you guys raise capital from investors to do these big deals, but also you are integrated on the property management side, and you manage your own units, but units for other people. So that's usually a leading indicator, right? When we make the decision to buy or build a multifamily project, it's based on what we have right now. But your rental team, they're in the market every day, so they're aware of these changes that are happening. Any trends there we should be aware of?
Yeah, so people ask, why do we do the third party side, right? And it's really to give us data. It gives us, maths, and you can really understand what's happening. And I like to give a story, and I won't mention the exact deal, but there's a deal that we competed on. We didn't win it, but we manage it. And I got a lot of insight into that deal in terms of this deal has been one of the easiest deals to run with. Right now, I understand that submarket. I'm like, this is a fantastic submarket. We're getting, 10% lease trade outs. And so, our team is deep in the trenches every day, and it really helps us become better buyers. And as we all know, Robert, buying is almost the easy side. It's actually operating and managing the deals is the hard side.
Boy, it sure is, but that is where the rubber meets the road. So good stuff. Hey, in addition to what you guys do in raising capital and managing properties, a few times a year, you hold a cool event, the Multifamily Investor Network, which is very much your brainchild, but is also open to all kinds of folks, whether they're new to multifamily or thinking about multifamily or entrenched in multifamily. And the next one's coming up in September in Denver. Tell us about that.
Yeah, Robert, so like you guys, right? We believe a good investor is an educated investor. And so the more we can educate people, create awareness, explain how real estate works, right? I came from tech, and a lot of people think of real estate like the stock market, where it's just about what is that annual year over year, and they forget about cash flow, pay down, depreciation, appreciation, all the things that make real estate awesome. And so that's where the Multifamily Investor Conference was born. We do 3 of them a year, and our next one coming up is in Denver. So we'd love to see people there. It's on a Saturday. It's a full day event. We have awesome speakers such as Robert to come out there and speak and just share, more of what's going on, right? And I tell people, you don't come to our conference and leave as an expert in anything, but you leave knowing the things that you don't know. And so that's why it's a one-day event, just to kind of give people a good taste of multifamily and see if it's right for them.
Well, and it's one of the most outstanding networking events because you've created an environment where you've got lots of the service providers, lots of people who are seasoned, who are happy to talk to the newer investors. You've got people that want to actively invest, passively invest. So I keep coming because it's a great event with great folks. It is September 7th. Save the date. And you'll find the details shortly on our website at realestateguysradio.com under events, where you'll see the Multifamily Investor Network. Hey, Ferris, we sure appreciate your time today, and thanks for sharing Houston with us.
No problem. Thanks for having me, Robert. Appreciate it.
From Houston, Texas, there's Ferris Musa. You can come meet Ferris and his team at the Multifamily Investor Network Conference. Get on the advance notice list at the website at realestateguysradio.com. Under events, you'll see live and in-person events. Just scroll down to the Multifamily Investor Network Conference, and I'll see you there. Well, that wraps up another edition of the Real Estate Guys radio program. On your to-do list, you need to get signed up for the 22nd Annual Investor Summit. There's space available, but it won't last long. We'd love to have you sail the high seas with a whole bunch of awesome real estate investors and speakers. Hey, big thanks to Garrett and Ted Sutton for sharing their ideas today and alerting us about the realities of the Corporate Transparency Act. It's certainly not fun, but like everything they do, it will keep us protected. Hey, we'll continue our string of awesome guests on the Real Estate Guys show next week. Until then, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers. Low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct. Asset protection strategies for real estate investors from attorney and Rich Dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys radio show.